Good day, everyone. I hope you had a great 4th of July holiday weekend. I don't take many vacations, but I can't resist the 4th of July. It's one of the biggest holidays of the year in the States. On Friday the 5th, we had the unemployment numbers released by the Labor Department. According to the report, approximately 195,000 new jobs were added in June. The number was a very pleasant surprise for the economy in light of the tax increases, federal spending cuts, and economic weakness overseas. The report this past Friday demonstrates that the U.S. economy added about 70,000 more jobs in April and May than the government had previously estimated. Looking at the big picture, it seems that employers are sending a message of confidence in the economy by hiring more workers and making the job market appear strong enough to slow down the bond purchases as early as September. The job growth is being fueled partly by consumer spending and the housing recovery, as consumer spending reached a 5.5-year high, helping drive up sales of homes and cars. As a result of the surprisingly positive unemployment report, interest rates soared to 2.73%, its highest point since August of 2011. The 10-year bond futures contract broke the recent low of 125 and continued moving lower by several ticks. Historically, the bond market overreacts to fundamental news and more often than not corrects itself within a few days or so keep that in mind. Looking at the bond market technically, the short-term RSI is at the 20 level, which is considered oversold for a short-term move. I'm anticipating the bond market to rally beginning of this week to the 126 to 127 level. I believe the market will begin moving down from there in a slower, deliberate manner because the biggest news for the next few weeks has already come out, and the bond market does not have too much unforeseen news on the horizon in the next few weeks. In short, you want to sell rallies in this market for the foreseeable future. At this point, I don't believe there's much speculation in terms of rising rates in the near future. It's most likely gonna happen. When interest rates move upwards, at this point, it's really just a matter of time. Interest rate sensitive stocks, such as bank stocks that make large percentage of their income from residential and small commercial loans, will start bringing in substantially more income as a result of increased lending and increase in interest rates. I highly recommend you begin following stocks such as Bank of America, ticker symbol BAC, Wells Fargo, ticker symbol WFC, and JP Morgan, ticker symbol JPM. These stocks make a very large percentage of their income from increasing interest rates and loans. All three stocks are at or near their 52-week high, and I'm anticipating a very large increase in prices for these stocks in the next 6 months or so. I will keep you posted when we trigger short-term pullbacks and breakouts on this sector and these particular three stocks that I have my eye on. Looking at the US stock market, the volume was low as anticipated during the holiday weekend. As a result, I wouldn't take the rally very seriously. If volume was higher, I would be a bit more concerned with the upwards move, but with such a low volume, it's very easy to inflate the market higher or lower artificially. The resistance area is finally in line with the last two resistance points, and the trend line is now complete. What I mean by higher or lower artificial inflation is when volume is low, small funds can come in and buy or sell stocks and cause the market to drive itself up. This is not possible when volume is high, but is very possible and very likely during holidays, so be aware of this. The market does not, I repeat, does not seem to be overly biased to the upside just yet. Right now, there's about 5 stocks making highs for every 1 stock making lows. When markets are extremely lopsided and biased, the ratio can get as high as 20 to 1, and we're not there yet, not by a long shot. So expect some short-term decline in prices in the beginning of this week. If prices do continue moving upwards, Consider the next resistance level of 1655 as a selling point. The stronger than expected unemployment report had a strong impact on the gold market. The price of gold typically decreases on bullish economic news, but the expectations were around 175,000 new jobs. The report was so bullish that gold dropped almost 30 points in one day, closing at around the 1223 level. I'm anticipating a bit of buying in the first part of this week, especially through Tuesday's closing. Looking at our existing three short positions, they held down fairly well in light of the strong rally. The light volume really threw things off and caused the market to overreact. However, none of the positions were stopped out and we're still bearish on all three stocks. Tomorrow we should have a few setups for Tuesday, and I will update you after the open tomorrow. There's no reports that should have any major impact on the stock market. However, we are hovering over earnings season, so expect some volatility in the stock market during the next few weeks. Have a great night and expect to hear from me tomorrow morning near the opening bell for our regular morning updates. Have a great night, everyone.